Recording in progress.
A very good afternoon to all my dear students. How are you all? I hope that you are through with chapter number 1 and 2 that we have covered. Like chapter number 2, we have covered in the last session. And I really want all of you to be prepared with your understanding, your learning, your notes with respect to chapter number 1 and 2. Then only you will find starting with chapter number 3 interesting and more easy to understand, right? So let me just have a look at who all had joined. Nitish, Sunil Kumar, Bani, Rajveer, Anup Kumar, Aditya. Good afternoon, students. Others also, please join. And students, today we'll be starting with chapter number 3 of paper number 5, which is risk assessment and internal control, right? So in our earlier chapter, we were talking about risk of material misstatement. Remember, audit risk is the terminology that has been used in chapter number 1 and 2. Internal control has been used a number of times. So this is the chapter whereby you will be getting a deep insight, a deep understanding of all these terms that we have already used in chapter number 1 and 2. So let me just share my screen and then we'll be starting with chapter number 3. So the chapter is risk assessment and internal control, right? Quickly tell me, what do you understand by the term risk? Quickly send in your reply. What according to you is meant by the term risk? So uncertainty, who is saying uncertainty? Bhumika. Rihana is saying something uncertain. Mahalakshmi is saying difficulty. Bhanu is saying material misstatement in the company. Others also please reply. Consequence of a mistake. Harsh is saying threats to audit procedure. Aman Patel is saying possibility of loss. Akshara is saying consequences of a mistake. Chalo, theek hai. Students, see, in this chapter, we are going to study about audit risk, inherent risk, control risk, detection risk, right? Then an understanding about the internal controls. Then the understanding of the concepts of materiality, essay 320, right? Then audit under an automated environment, whereby we'll be studying about the types of controls in an automated environment, the importance of data analytics, right? And then the auditor's responses to assess risk, a brief about that. Otherwise, all those procedures are in detail in chapter number 4, right? Now, we will be starting with audit risk. See, students, when the financial statements of a company, let's say XYZ and Associate, are conducting the audit of ABC Limited, right? And there are material misstatement in the financial statement. Now, what is meant by misstatement? First, let us have a look at that. What is meant by the term misstatement, right? So when there is a difference between the amount that should have been recorded and the amount that is reported, and not only the amount, but also the classification, the presentation and disclosure, right? So that is termed as misstatement, right? So difference between the amount, classification, presentation or disclosure of a reported financial statement item and what is required as per the applicable financial reporting framework. So if a particular financial reporting framework requires that, let's say, the repairs to machinery are to be charged to P&L. So this is the requirement. However, in the financial statements of the company, the same have been capitalized, right? So the recorded amount is different maybe by way of amount, classification, presentation, or disclosure, vis-a-vis what is required by the applicable financial reporting framework, it will be termed as misstatement or mistake, as a number of you were saying, were using the word mistake. And so, to tell me, can mistake be intentional also? Quickly send in your replies. Can mistakes be intentional also? So yes, it can be intentional and unintentional. So I can say it can be fraud, it can be due to fraud, or it can be due to error. For example, charging capital expenditure to revenue, or selection of inappropriate accounting policy. And more examples are given in your module. Just give me a minute. I think I've opened a wrong file. Just give me a minute. Meanwhile, look at the examples given on page number 3.5 of your module. So page number 3.5. So what can be different type of misstatements? It can be charging of an item of capital expenditure to revenue or vice versa, right? Or you give me examples. What can be misstatement pertaining to a financial statement? Then I'll discuss it from the module. Let me just have a look at the answers. So error of principle, Dharni is saying entering under wrong head, presentation under wrong head, wrong transaction, wrong disclosure, omission, right? So what can be various examples of misstatement? These can be like charging of your item of capital expenditure to revenue or vice versa, or difference in disclosure in financial statement vis-a-vis requirement as per the applicable financial reporting framework, then selection or application of inappropriate accounting policy, difference in accounting estimate of financial statement item and appropriateness in applicable FRF, intentional booking of fake expenses in statement of P&L, overstating of receivable in financial statement but not writing of irrecoverable debts, or overstating or understatement of the inventories. So it is not in the last example, we can say the applicable FRF AS2 require that the way the financial the inventories are to be reported, but in the financial statements of the company, they are not reported as per the applicable FRF, that is AS2, right? Now, these misstatements can be due to fraud or can be due to error, right? Now, what is meant by risk of material misstatement, as we were discussing in our earlier chapter also? So, second term, before understanding risk of material misstatement, can be the term material. What is meant by term material? It means important. Otherwise, we will be doing this term in detail when we will be covering SC 320 in this chapter in detail. Materiality in planning and performing an audit, right? Abhi ke liye just try to understand when any item of the financial statement, any assertion of the financial statement, when it is important for the users, fundamental to the user's understanding of the financial statement, it is what? Important, material, relevant, right? So what is the risk of material misstatement, right? So the risk of material misstatement is the risk that the financial statement may be prone to mistake, may be materially misstated prior to audit. So the basic nature of the financial statements and the internal control that have been implemented with respect to the financial statement is such that they could be materially misstated, right? For example, we took an example that let's say a company is a manufacturing company. So chances are there that a major part of the expenditure may be capitalized, though it should have been charged to P&L or vice versa, right? Or let's say any companies there whereby inventories are in huge amounts. So maybe the valuation of such inventory is not as per the applicable FRF, right? So the risk of material misstatement is the risk that the financial misstatement are materially misstated prior to audit. Abhi, the auditor hasn't come into picture. Abhi, we are just talking about the financial statement, what risk they contain, right? Risk of material misstatement, students, is of two types, right? So it can be inherent risk and it can be what? Your control risk, right? So why I have just told you about this, because in our earlier chapter, we have read somewhere or the other about inherent risk or control risk. Now your understanding of all these risks is going to be more clear, right? So we have seen that risk of material misstatement has nothing to do with the audit, right? Then what is meant by the term audit risk? So see, when I told you the meaning of term material misstatement, now let us consider an example that XYZ and Associates are conducting the audit of ABC Limited, right? Now the financial statements of ABC Limited are such that there are a number of material misstatements, right? However, our auditor XYZ and Associate, they give an opinion that the financial statement reflect a true and fair view. In other words, can I say that the auditor has given an inappropriate opinion when the financial statements are materially misstated? Now you have understood the meaning of the term material misstatement, right? So understanding audit risk is going to be now easier for you. I'll repeat it. The financials of ABC Limited, the financial statement contains a number of material misstatements, right? Irrespective of that, the auditor of the company has given an opinion that the financial statement reflect a true and fair view. However, they should have given an opinion that the financial statement do not reflect a true and fair view, right? So in other words, I can say that the auditor gives an inappropriate opinion when the financial statements are materially misstated. So audit risk is the risk that the auditor, so whose hands is this risk? The auditor. That he gives, and in fact, out of this audit risk, one part that is detection risk that we are going to study is the risk that is in the hands of the auditor, right? So audit risk is the risk that the auditor gives an inappropriate opinion when the financial statements are what? They are actually materially misstated, right? So in other words, I can say it is the possibility that the auditor expresses an unmodified opinion even when the financial statements are materially misstated. So unmodified opinion is what? Where there is no modification. Auditor is saying that the financial statements reflect a true and fair view. So this is the term, this is the meaning of the term audit risk. Now tell me, in your chapter number 1, where have you studied this term audit risk? What was the topic where you have studied? So let me just have a look at your queries and your replies. So FRF is Financial Reporting Framework. Anubhav, is it clear? Yes, unmodified means that the auditor is saying that the financial statement reflect a true and fair view. In chapter number 1, Bhumika, I'm asking you. Tell me, where have you read this term audit risk? Yes, Nandini, you are correct. Aman is correct. Others also please reply. Others also please reply. So when you had done the topic of inherent limitations of audit, you have studied that audit risk cannot be reduced to zero. It can be brought to an acceptably low level, right? Why auditors cannot be reduced to zero? Because of inherent limitations of audit, right? It can be reduced to an acceptably low level. So basically, the purpose behind conducting and at the time of conducting the audit and giving an opinion is that the auditor tries to reduce the audit risk to an acceptably low level. Now, what is meant by audit risk? I hope it is clear that auditor is giving an inappropriate opinion when the financial statements are materially misstated, right? Now, students, just consider one more thing, that the vice versa of this thing, that is, the auditor gives an inappropriate opinion when the financial statements are not materially misstated. Just the opposite of this case. Just a minute. What is not included? So, when the financial statements are as such not materially misstated, however, the auditor gives such an opinion. See, such kind of risk, the impact of such kind of risk is ordinarily insignificant. So, audit risk will not include such kind of risk, right? Also, when we talk about the business risk associated with you can say the XYZ and associates in our case, the business risk associated with the auditor's firm. So such kind of risk are also not included. Like if there is any loss from litigation, if there is any adverse publicity or any event arising in connection with the audit of the financial statements, in such case, such kind of risk will not form part of audit risk. Why? Because such kind of risk are the business risk of the audit firm. They have nothing to do with the auditor's opinion as such, right? So what all is included in business in audit risk and what all is not included, let us just have a look at this overview. So audit risk is the risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. It is a function of risk of material misstatement and detection risk. This I'll be taking up later on. Auditors' business risks such as loss from litigation, adverse publicity, other events arising in connection with the audit of financial statement, these are not included in audit risk. Also, risk that the auditor might express an opinion that the financial statements are materially misstated when they are not. So that means just the opposite of definition of audit risk. So that situation is not also included in the uh, you can say scope of audit risk. Is it clear? Is it clear? Is the concept of audit risk clear, students? Quickly tell me so that we can proceed further. Now, student, audit risk is a function of risk of material misstatement and detection risk. See, I'll pause here to take up your query. So Anubhav is saying, ma'am, what is auditor's business risk? See, every business has its business risk, right? So if you talk about the auditor's business, what is it when it is providing the auditing and assurance services, right? So various kind of risks can be there. For example, let me just share the screen with you. So what can be various kind of business risk associated with the auditor's business? That is loss from litigation. Let's say there is any adverse publicity of the auditor. So will that also become audit risk with respect to a client of that firm? No, because that adverse publicity is a part of the business risk of the firm, not that audit of that particular client. Is it clear, Anubhav? Is your doubt clear now? Okay. See, Dhanush, material misstatement, I've told you about, I have given you a number of examples of misstatement, right? And misstatement can be due to fraud or error, right? That we have discussed. Material is something which is important to the users of those audited financial statement. Abhi ke liye just try to understand this, right? Otherwise, we'll be doing this in detail when we will be covering up essay 320. So, Dhanush, is your doubt clear with respect to material misstatement? Right? Now, students, we have done the concept of what audit risk is and what is not included in the audit risk, right? We also looked at the concept of misstatement, material misstatement, and the various examples of material misstatement, right? Now, audit risk is a function of risk of material misstatement and detection risk, right? Further, risk of material misstatement consists of inherent risk and control risk, and detection risk consists of sampling risk and non-sampling risk. So we will be discussing all these kinds of risk. Just be with me. After the discussion with respect to all these kinds of risk, we will just have a look at all the risks together, and I'm sure that your understanding is going to be very much clear with you, right? So now the first topic that I am going to cover is what? Risk of material misstatement, which though I have already told you. So risk of material misstatement as per SA 200 is the risk that financial statement are materially misstated. Very, very important prior to audit. So abhi the auditors haven't come into picture, right? Now student, what happens is when the let me just give you an example. Suppose you are conducting the audit of ABC and ABC Limited. Why I'm not able to write? Just a minute. So I'll just verbally tell you. Suppose you are conducting the audit of ABC Limited, right? Now, the company, the client organization, they will have the financial statements prepared, right? On the financial statements or with respect to the preparation of financial statement, the company is going to implement, and in fact with respect to each and every function of the organization, the client organization is going to implement an internal control, right? For example, let's say the company has a number of traveling expense vouchers that are submitted by the employees of that company, right? So the processing of such traveling bills is such that whenever any traveling bill comes, the company has imposed an internal control, or they have implemented an internal control that any traveling expense whereby the amount exceeds rupees 10,000, the same will be verified by two authorized signatory, and then only the payments will be made. So this is a kind of internal control that the company has implemented, right? Take another example. So I'll give you a very general example. Whenever you enter the metro station or a mall, you see that there are these metal detectors, biometric devices can be there. So these are what? These are the part of internal control. So who is implementing them? Is it the auditor or is it the client organization? I need quick answers from your side. Quickly tell me. Who is implementing these? So it is the client, right? It is the client, everyone is saying client or the management, okay? So now try to understand risk of material misstatement. It consists of two things, that is inherent risk and control risk. And both these risks are on the part of the entity itself. Because who is preparing the financial statement? It is the entity. So inherent risk, what is meant by inherent? Inbuilt. The very nature of the financial statements of the client is such that there can be certain kinds of misstatements. For example, let's say any accounting standard is to be applied, right? A new accounting standard is to be applied while preparing the financial statement. The management is unable to implement that accounting standard properly. So this is the misstatement or the outcome, the misstatement that is going to happen, this is inherent with the very process of preparation of the financial statement. इसमें auditor has nothing to do. अभी तो auditor hasn't come into picture. So this is the risk which is inherent to the basic nature of the financial statements of the client, right? So this kind of risk is what? Inherent risk, right? Take another example of that traveling bills. So let's say the control has been implemented, but that is not working effectively. So I'll further extend that example. So when the traveling bill is to be passed, if it exceeds 10,000, the same needs to be passed or authorized by two signatories. This is the control. However, what is actually happening that whenever the bill of any senior is coming, such control is bypassed. No one is looking at as to whether two signs are there or not. Even one signatory is signing and it has been done. So this is the internal control is not able to prevent that misstatement. This becomes what? The risk of internal control. That is the control risk. Now tell me, is auditor has to do anything with respect to inherent risk and control risk, or are these the entities risk? Quickly send in your replies. Entity has to look after it. Entity, Mahalakshmi, Smriti, Nandini, Rajveer, Anubhav, Sunil, Bhanu, Rohit, everyone is saying this. That's good. Students, you are replying, you are making this session interactive. This is really very appreciable. So back to our discussion. So components of risk of material misstatement are what? Inherent risk and control risk. And these are the entities risk, right? So you have understood something about inherent risk and control risk by the help of the example. Now let us just have a look at it in some technical terms. So what is meant by the term inherent risk? The susceptibility is what? Likelihood. So likeliness. So I'm not able to write. You may write it on your own. Likelihood. The meaning of the term susceptibility. So it is likelihood of an assertion. Now, what is meant by term assertion? I'll just take this up. First of all, let us finish up with this inherent risk discussion. So the susceptibility, likeliness of an assertion, abhi ke liye try to understand that any of the item of the financial statement to a misstatement that could be material, either individually or when aggregated with other misstatements before consideration of any related control. I gave you example of what? Implementation of new accounting standard. So there, I was not talking about any of the internal control now. I was saying that the very nature of that implementation of accounting standard is such that there can be misstatement in the financial statements. So that is what inherent, inbuilt within the nature of the financial statements of the client. So we'll read this definition again. The susceptibility, that is the likeliness of an assertion to a misstatement that could be material. So as auditors, we are concerned about material misstatements, right? Either individually or when aggregated with other misstatements. So maybe there is a misstatement of just rupees 10. It is not material, right? Um, I'm just giving you a brief idea. But there are 1,000 mistakes of same rupees 10. So chances are there that those misstatement aggregated with other misstatements become material, right? So that is why it is mentioned either individually or when aggregated with other misstatements before consideration of any related control. Students, when we were discussing the definition of risk of material misstatement, I told you these words are very important, that it is the risk that financial statements are materially misstated prior to audit. And in the definition of the term inherent risk, the susceptibility of an assertion to a misstatement that could be material either individually or when aggregated with other misstatement before consideration of any related control. So abhi I'm talking about the first step, financial statement. The second step is what? Internal control. And then the third step is what? Audit risk, right? So abhi to I'm talking about the inherent risk with respect to what? The preparation, presentation of financial statement, which is inbuilt within the system of preparation, presentation of the financial statement. Is it clear? And students, this kind of inherent risk can be higher with respect to some kind of assertions, or it can be lower. It all depends upon auditor's professional judgment and auditor's performance of the audit procedures, right? Now, what is meant by the term assertion? Are you clear with the meaning of the term assertion? Quickly tell me yes or no. Acha, Nisha has already mentioned, ma'am, what is assertion. Rajveer is saying yes, Nandani is saying yes, Navdeep is saying no. So I'll just give you a brief idea. Otherwise, we are going to discuss this term assertion in chapter number 4 and 5 in detail. Okay? But a brief idea for the purpose of understanding this. See, suppose there is a building appearing at the historical cost of which is rupees 10 CR in the financial statements of ABC Limited, right? When you look at the building amount of 10 CR, what uh, what meaning do you derive out of that? Building 10 CR in the balance sheet, it is appearing. What meaning will you derive? Quickly tell me. Anubhav, I can't get your query or reply. What is it? Repeat it, please. So Rohit is saying book value of building is 10 CR, cost of asset. Tanvi is saying building is of 10 CR. See, when the management of the client organization, they have to tell the users of the financial statement that, see, our company is having a building of 10 CR. Will it just pick up a mic and start announcing? The answer is no. How will they tell the users of the financial statement, the shareholders, the creditors, the bankers, the government departments, that the building is the historical cost of which is 10 CR? By reflecting it in the financial statement, that is reflecting it in the balance sheet, right? Now, when that building is mentioned as 10 CR, it implies, or the management want to tell the users of the financial statement that, listen, our company is having the building of 10 CR. Our company is having an ownership over that building. So tell me, is the word ownership mentioned somewhere in the balance sheet? No, but this is implied. So this is one of the implied assertion that the management wants to tell the users of the financial statement that our company is having the ownership over this building. So this is called what? Ownership assertion. Assertion is you are representing something. So I told you, will management just pick up the mic and start announcing that, see, we have a building of 10 CR? No, it will represent it in the financial statement itself, right? Same way, when management has mentioned building 10 CR, it also wants to tell the users that this building actually exists. So are these words mentioned somewhere actually exist? Just a minute. So are these words mentioned somewhere that the building actually exists? So the answer is no. But it is an implied assertion, and I'm repeating it again. The dictionary meaning of the term assertion is what? Representation, or you can say declaration by the management, right? So it is what? Existence assertion, right? Now, when building of 10 CR is mentioned, is it mentioned somewhere that it is valued properly? No. It is again one of the implied assertion that the valuation of this building is as per the applicable FRF. This is what? Valuation assertion. So assertion is not only every item of the financial statement. Assertion means that if this is any item of the financial statement, let us consider it as a building. Various aspects, the existence, the valuation, the rights and obligations, the presentation and disclosure, these are all the assertions that the management wants to say, and the user will assume. Okay? Yes, who is using this word assuming? Absolutely correct, Aman. So the users are going to assume this only, that management wants to say that this building exists at, that is tense, that is existence assertion. that this building is owned by the organization. That is what rights and obligation assertion. That is valuation is as per FRF, financial reporting framework, that is valuation assertion. Presentation disclosure is as per the applicable FRF, that is again the presentation disclosure assertion. Is it clear, Nisha? Is it clear now? So I've just given you an idea. Otherwise, there is a complete chapter number 5. And in chapter number 4 also, somewhere or the other, the term assertion has been discussed in detail. So is it clear now? Nisha is saying yes. So Harsh is saying management makes assertion during the course of audit. No, management makes assertion while preparing and presenting the financial statements. And we as the auditor, we have to check those assertions only. How we are going to check? Chalo, I'll extend this building wala example. So management has asserted or declared or representing by mentioning in the financial statement that building is 10 CR, the existence assertion, the rights and obligation, the valuation, the presentation disclosure. This is done on the management's part. What is my duty as an auditor? I'm going to examine these assertions. How? By performing audit procedures. So when I have to see whether the existent assertion, this is which is implied by the management, whether that is correct or not, how will I, which audit procedure will I perform? I'll perform inspection. I'll just go and inspect that building, whether that building is actually existing or not. Then management has asserted another assertion of rights and obligations. How will I check that? By performing another audit procedure. How? I will inspect the title deeds, the electricity bill of that building. So that way I'm going to check the rights and obligation assertion. How will I check the valuation assertion with respect to building? I may check the depreciation schedule, right? So these are the so depreciation check recalculation. Hana, if you remember, these are what all audit procedure ICAI ORR that we discussed in our last session. So are you able to correlate as to how audit procedures the auditor is going to perform in order to check each and every assertion that is there in the financial statement? And when the auditor checks all the assertions, be it in the form of P&L items, be it in the form of various assertion regarding balance sheet item, notes to accounts, anything that is there in the financial statement, that the auditor checks, when he checks, examines all the assertion, then only he can give his opinion on the financial statement as a whole. Because when we give our opinion in the auditor's report, we say that the financial statements containing the balance sheet as on so and so date, the P&L for the year ending so and so, the notes to accounts, they represent a true and fair view. We do not say that the sales represent a true or fair view, or we do not say that the purchases represent a true and fair view. We give our opinion on the financial statement as a whole. So now I'll put a full stop to the discussion of topic assertion here, because otherwise this topic will be left. But before restarting with our topic of chapter number 3, I would want all of you to reply whether you have understood the term assertion. Quickly send in your replies. Nisha is saying understood, others also. Okay. Like we'll be discussing this topic again and again in chapter number 4 as well as in chapter number 5. So let me just share the screen again. Okay. So this was the term that we have discussed. Okay. So the susceptibility of an assertion, the assertion can be, now you will be able to understand, the assertion can be about a class of transaction, or about any account balance, or about any disclosure of a misstatement. So I've mentioned here dot dot dot. I'll just take you through the module relevant page. So page number 3.6, just have a look at this. Inherent risk is the susceptibility, which is likeliness of an assertion about a class of transaction. So I can say purchases, sales, that is P&L item, account balance. So can I say the balance sheet items like building or furniture, and disclosure to the misstatement. So disclosure, presentation and disclosure of all these items, as well as any other disclosure that is required to be made in the notes to accounts as per the required applicable financial reporting framework. So now you will be able to understand this pink highlighted, that about a class of transaction, account balance or disclosure of the financial of a misstatement, right? Either individually or when aggregated with other misstatement before consideration of any related control. So this is the basic nature, inherent nature, inbuilt nature of the financial statement, that there can be risk. See, risk is associated with each and everything, right? So with the preparation and presentation of financial statement, there can be misstatement that I do any, let's say, calculation mistake, totaling error is there, Hana. So inherent risk can be there. Any the example, the way we discussed that, any of the capital expenditure may be charged as revenue, right? So it can be higher for some assertion, like if there are any complex calculation, like estimates are to be calculated, right? Or let's say if any merger and acquisition are there during the year, Hana. So complex calculations are there. So in that case, it can be higher with respect to some of the assertions, right? Now, students, there are a number of external factors that impact the inherent risk. For example, with respect to a mobile company, which is totally based on technological developments. So let's say the company is running fine, it is earning profits, the financial statements are based on going concern basis, and overnight a new technology comes and the company is not able to, cope up with that technology, and the products of that company become obsolete. Now, what is the risk associated with this? That, see, the company has prepared its financial statement based on going concern, that the business of the company will be continued for a foreseeable future. However, overnight what happened is a new technology came and all the products became obsolete, and the demand of that company vanished. The demand of that company's product vanished. Now, preparation of the financial statement based on going concern is a misstatement, because this fact that the technological development is there and there is a danger to the going concern of the company, that should have been reflected in the financial statement, that should have been disclosed in the financial statement, though the same has not been disclosed. So the external factors influence what? The inherent risk. ठीक है? ठीक है, Sunil Kumar has given the example of Nokia, which is absolutely correct. ठीक है? So this is about what? Inherent risk, right? So few examples are given in your module. Examples of inherent risk could include: an accounting standard provides guidance on some complex issue which might not be understood by management. Therefore, recording of the issue in financial statement can carry inherent risk. So is the internal control, has the internal control to do anything with this? No. Has the auditor to do anything with this? No. Okay. There are large number of business failures in an industry. Therefore, assertions in financial statements of an entity operating in such industry carry an inherent risk of being misstated. So the way I gave example of technological development in a mobile company. So overnight, the demand for the products vanished, but the company has prepared the financial statements on going concern basis, and there is no disclosure in the notes to accounts with respect to the danger to the going concern of the company. So the financial statements have an inherent risk. They are materially misstated. Is it clear? Are you all clear about the concept of inherent risk? Okay. Now the second concept is your control risk. So I gave you example of your traveling expense ka vouchers, ठीक है? Another example can be, let's say there is a huge inventory. There are warehouses whereby the inventory of furnitures. For example, ABC Limited is a company manufacturing the office and office furnitures, right? Now there are a number of CCTV cameras installed at the uh, warehouses or the factories. So this is one of the internal control implemented by the management. Now, so CCTV cameras are not working throughout the year. Or let's say the warehouse is in such a place whereby there are power failures and there is no provision of backup for power failure in that place. So this, though internal control has been implemented, but is it operating effectively? Answer is no, right? So this was a general example with respect to a business, but I gave you traveling expense wala example, that whereby two authorized signatory has to sign, but in case of seniors and all, such internal control has been bypassed, right? So what is the definition of control risk? So risk that a misstatement, and again students, misstatement can be due to fraud or error, could occur in an assertion. Now to you all are clear, assertion about a class of transaction, about account balance or a disclosure, and that could be material either individually or when aggregated with other misstatement. So abhi tak it is same. ठीक है? It is same to the definition of what we have read for inherent risk. Will not be prevented or detected and corrected. So I call it as PDC. But if you just see, this is connected by term or and this is connected by term and. I'll tell you why. On a timely basis by the entity's internal control. Okay? So in short, I can say that any of the misstatement, or I can say any of the material misstatement, will not be prevented or detected and corrected. So either the CCTV camera should prevent, है ना, the thief or whoever is stealing the furniture. So preventing, or if the same is detected and corrected. So either the thing should be prevented, or if it is detected, the same should be what? Corrective. Corrective action should also have been taken, right? So on a timely basis by the entity's internal control. So a material misstatement, if that is not prevented or detected and controlled by entities internal control on a timely basis, it is what? It is a control risk, right? So now inherent risk and control risk, they are the entity's risk. They are not in auditor's hands as such, right? So basically, in other terms, we can say that internal control is not sufficient enough to stop from happening or finding and rectify in appropriate time any material misstatement. Okay? Now tell me, if I want all of you to reply, if the internal control of an organization is very effective, the control risk will be low or high. Quickly send in your replies. I'll repeat my question. If the internal control of an organization is very effective, the control risk is going to be high or low? Only one wrong answer, two wrong answers, three wrong, four wrong answers. I'll repeat my question. So I'm saying that, just a minute, where is the file? I'm saying when the internal control of an organization is very effective. So let's say with respect to the traveling bill, the internal control is such that no invoice, no bill can be passed without signatures of two signatories, and it is really very effective. It is operating throughout the year. So the control risk that the traveling bills will be passed even if there is no signature of two authorized signatories. So will that risk be high or low? Now answer it. So it will be low, students. There is an inverse relationship. So for all those who have written high earlier, now I want those students to write, are they able to understand now whether it will be high or low? Because if the internal control is good, risk is less. and vice versa. If the internal control is not good, risk is going to be high. As simple as that. Clear? So many of you have are now saying yes, ma'am. Now it is clear. ठीक है? So there is an inverse relationship between the efficiency of internal control and the control risk. So if the efficiency of internal control is high, the control risk is going to be low. If the efficiency of internal control is less, control risk is going to be high. Very logical, right? Let us just have a look at various examples with respect to the control risks that are given on page number 3.7 of your module. So we are reading from here. Examples of control risk. So a company has devised a control that cash and checkbook should be kept in locked safe and access is granted to authorized personnel only. There is risk that control is not being followed. So this is what the control is not followed. Then it is what control risk. An entity has devised a control that fire extinguishers. So the way I gave example of CCTV cameras, but if they are not working, so this is control risk. So fire extinguishers and smoke detectors are in place and are in working condition at all the time to reduce the risk of damage to inventories caused by fire. There is a risk that fire extinguishers in place are expired and are not refilled. So these fire extinguishers are to be refilled. So these are not refilled. Similarly, there is a possibility that smoke detectors are not working. So the control is not working properly. Now, the third, a company has devised a control relating to what? Petty cash. That items of expenditure of only less than 10,000 should be routed through impress system of petty cash. There is a risk that control is not being followed. So these are what? The internal controls which are implemented by whom? The management or the client organization, and those are not working properly. Tell me a few example of internal control, common or one or two common, very common example of internal control that an organization may implement. Charan Sai, please repeat your query. Inventory count. Physical inventory count is one of the internal controls. Rajveer, correct. Others also please reply. Yes. Attendance. If biometric devices are there whereby you need to, give your thumb impression, then only your attendance will be marked. This is again what internal control. Physical examination of inventory. Who is saying? Harshman is saying correct. Card swipe. Harshada is saying correct. ठीक है कैमरा सीसीटीवी कैमरास सी स्टूडेंट्स one of the very common internal control is segregation of duty है ना that the person, let's say, with respect to sales, so the person who is placing the order, or let's say from the very first step to the last step, when the sales are booked, right, the payments are received, right? So the goods are given, the risk and rewards are transferred. So all these things are done by different persons. Who books the or who accounts for the provision for bad and doubtful debts? So there is segregation of duty. So this is also one of the example of your internal control. ठीक है? Is it clear? So students, your examples are also correct, and these are the various example of your control risk. Now just read page number 3.11. Read this test your understanding one. And I want all of you to please reply. Let me just have a look at the strength. Meanwhile, please reply. Charan Sai, your doubt, sorry, I'm not able to understand. Please repeat it. Though you have again written it, but still it is not clear. So Wear and Tear Private Limited is a startup engaged in providing holistic solutions to problems of paddy stubble burning, mainly catering to needs of farmers of northwestern India. Due to importance given by governments to this issue, companies have entered in the market in past few years. Many of these companies have not been successful and have gone bust. As an auditor of the company, can you spot the component of, so see, it is specifically mentioned, component of risk of material misstatement. So, two components are there. So, what is it? Rohit, check your answer. It is asking for component of risk of material misstatement. Harshada, give the specific answer. Mahalakshmi, correct. See, component of this risk of material misstatement can be either inherent risk or control risk. So I need answer from these two only. ठीक है. So the answer is what? Your inherent risk. ठीक है? Because this is inherent. Let us just read it from the answer that is given on page number. So the page number is 3.83. So it says that, or I'll share also. This one. It has been stated that many companies engaged in providing holistic solutions to problem of stubble burning have not been successful. It shows that line of activity is inherently risky. Therefore, there is a greater possibility of misstatement. Why? Because it may happen that going concern, the company has prepared the financial statement based on going concern and no notes or no disclosure has been given in the notes to account. However, since it is specifically mentioned that the business has not been successful and many of the companies are going bust, so it might happen that in the foreseeable future the company cannot be going concern, right? So if financial statements are prepared based on going concern without any disclosure, so the financial statement as a whole are what? Materially misstated. So the component of risk of material misstatement involved is what? Inherent risk, right? Now read test your understanding 2 given on page number 3.11. The second question. I'll share the screen also. A company has devised a control that its inventory of perishable goods is stored in appropriate condition. So it is saying the company has devised a control that the inventory of perishable goods is stored in appropriate condition in a controlled environment to prevent any damages to inventory. Responsibility is fixed on two persons to monitor environment using sensors and to report on deviation. So this is the control that two persons will be involved. They'll monitor, they'll use sensors, and in case of any deviations, they'll report. Identify the component of risk of material misstatement involved as an auditor of the company. I need answers. So all of you are writing control risk, which is clear, which is correct. No, these are not to be mentioned in the audit report. Mahalakshmi, Abhi, don't go so far, that far, because Abhi just try to understand that here to we are just obtaining an understanding about the risk of the organization and the internal control. So we are not discussing anything about the opinion. Opinion will be with respect to the financial statements only, not with respect to internal control. ठीक है अभी के लिए इतना ही try to understand. Mahalakshmi, is your doubt clear? Yes, Anubhav, job ka timekeeping, these are all part of internal control. See, if segregation of duty is not there, so Smriti is saying, ma'am, if there is no segregation of duty, how is it is going to affect the financial statement? So let's say there is a factory whereby there are thousands and thousands of workers. ठीक है? There is no internal control. Any payment is made to any dummy workman, because in factories, the labor are given cash, if you all are aware, or nowadays, even if the accounts are being opened, but let's say to dummy workmen, the payments have been made. So will it have an impact on the PL or not? Or if, let's say, the internal control with respect to sales are weak, fake sales are recorded, will it have an impact on the profits of the organization or not? Smriti, tell me. This is going to have an impact on the financial statements, because sales is a part, profit is a part, labor is a part of the P&L or the financial statements. ठीक है? Uh, whose doubt was it? Smriti, is it clear? So, let me just go back to Guru Sai. What is the name? Charan Sai's doubt. What is the definition of control risk? So, we have seen that the risk that there is a doubt of Guru. I don't remember the name of the child, but there is doubt relating to this definition. So a risk that misstatement, and which could be material, will not be prevented or detected and corrected on a timely basis by the entity's internal control is what is control risk. So this is the definition. So if the internal controls are not effective, the control risk is going to be high. If the internal controls are effective, the control risk is going to be less. Is it clear? Whoever has the doubt relating to the effectiveness of internal control and this definition, is it clear? ठीक है. चरण साई गुरु. ठीक है. Shifa Banu is saying, ma'am, what is the difference between inherent risk and control risk? So students, see, though both kinds of risk are the entity's risk. But when I talk about inherent risk, this is pertaining to the presentation of the financial statement itself. So the nature of the preparation presentation of the financial statement of that particular client operating in that particular industry is such that such kind of risk is inbuilt. It is in the very nature of such financial statements, right? And so abhi we are not talking about any internal control. Now, in order to avoid, prevent, or detect and correct any material misstatement, when the company or the management implements the internal control, and that internal control is not able to prevent or detect and correct that material misstatement in a timely manner, that is what is called control risk. So control risk is the, you can say, lacking on the part of the internal control. Internal control is not so effective. Inherent risk, we are not talking about internal control. Is it clear? Shifa, is it clear? Shifa Singh, yes. I'll be uploading a PPT whereby all the like a summary of this entire chapter, Rishita. Okay? So I hope these risks are clear. Where is the file? Okay? So inherent risk we have seen and control risk we have seen. Okay? Now, next risk that we are going to discuss is the detection risk. Page number 3.7 of your module. Now, what is detection risk? So we have seen that audit risk is a function of risk of material misstatement and detection risk. I'll just show that statement to you again. If you remember when we were discussing about audit risk, so I told you that audit risk is a function of risk of material misstatement and detection risk. Okay? Now, students, abhi, before understanding the meaning of detection risk, just tell me, when we are conducting an audit, we as auditors, our motive is to reduce audit risk to an acceptably low level because it cannot be reduced to zero owing to inherent limitations of audit. इतना clear है? An audit risk is a function of risk of material misstatement and your detection risk. ठीक है? And I've told you that risk of material misstatement is entity's risk. Auditor cannot do anything in that. वो तो basic nature of financial statements में है और internal control में है where auditor cannot do anything. Now tell me, if the auditor has to reduce the audit risk to an acceptably low level, what is the main, you can say, area in this definition on which auditor will work? Because risk of material misstatement pe to auditor cannot do anything because these are what entities risk. So what can auditor do in order to reduce audit risk to an acceptably low level? Reduce detection risk. Arjun, absolutely correct. Bhanu, absolutely correct. Smriti, absolutely correct. Increase the sampling testing. Bhumika, absolutely correct. Harsh, absolutely correct. Auditor will work on detection risk. Because the other kind of risk is not in the hands of the auditor. Na? He cannot do anything with ROMM, risk of material misstatement as such, because these are the entities risk. So what will he do? He'll try to reduce the detection risk. Okay? Now, having this concept in your mind, we'll discuss about detection risk. Now, what is the detection risk? As the name suggests, detection. Who is detecting here? Auditor. And we are detecting the misstatement now by performing audit procedures. So, a risk that the procedures performed by the auditor to reduce audit risk to an acceptably low level will not detect a misstatement that exists in the financial statement and that could be material either individually or when aggregated with other misstatement. Are we reading anything new in this definition? No. We have done all these things, but yes, as a definition, we are reading this definition for the first time. But if you just look at each and individual line, we are thorough with all the concepts. So read the first line with me. The risk that procedures performed by the auditor. You all know that the auditor will perform the audit procedures. Why? To reduce auditors to an acceptably low level. ये भी पढ़ा है ना? Will not detect a misstatement that exists and that could be material. Because now you all know that we as auditors, we are concerned with material misstatement, either individually or when aggregated with other misstatement. Is it clear? And where is it given? Again, essay 200 में ही this definition is also given. ठीक है? Is it clear? Is it clear? Now, detection risk. So basically the thing is that the auditor's procedure are such that he is not able to detect a material misstatement. So I'm saying this in short form, otherwise the language is what? Will not detect a misstatement that exists and that could be material either individually or when aggregated with other misstatement. So the procedures are such that the auditor is not able to detect a material misstatement in the financial statement. And the auditors, so this is not page number 3.18, this is page number 3.8. So by mistake, I have written 3.18. Just a minute. So this is 8. ठीक है. So a risk that procedures performed by auditor to reduce audit risk to an acceptably low level will not detect a misstatement that exists and that could be material either individually or when aggregated with other misstatement. So what can be an example? So let's say the client organization has an inventory which is material for the users of the financial statement, right? Instead of attending the physical inventory count, auditor is performing some other procedures with respect to that inventory. So he is not able to detect the material misstatement with respect to valuation of that inventory. So this is what detection risk. ठीक है. Same way, let's say auditor selects a sample with respect to, let's say, debtors, and suppose 20% sample he has taken. Based on the sample, the conclusions that he draw, those are different. Had he taken the entire population, had he checked the entire population. So the results based on the sample are different from the results that he would have obtained if he would have applied the audit procedures on the entire population. So this is what sampling risk, right? So detection risk is divided into two kinds of risk, that is sampling risk and non-sampling risk. So as the name suggests, sampling risk, you all know that checking 100% transaction is not possible. Auditor resorts to sampling, right? So sampling, we will be discussing again sampling in detail when we will be doing SA 530. But abhi ke liye just try to understand that, let's say if 1 lakh sales transaction is there, an auditor, after performing the risk assessment procedure, he intends to rely on the internal control and he decides that, okay, I'll be checking, let's say 40% of the total sales transaction. So he's taken a sample of 40%, right? So, but if the auditor's conclusion based on the sample may be different from the conclusion if the entire population were subjected to the same audit procedure. So in our example, population means what here? Population means the sales ka transaction, right? Sample chosen may not be representative of the entire population. Non-sampling risk, that the auditor is reaching an erroneous or wrong conclusion, not because of the sample risk. The reason is something other than sampling risk. It can be inappropriate audit procedure has been selected, inappropriate planning has been done, inappropriate audit program has been set, inappropriate audit strategy has been set. So anything but other than sampling risk. So auditor reaches an erroneous conclusion. Erroneous is what? Wrong. For any reason not related to sampling risk. Example, due to inappropriate audit procedure, or I told you, let's say there is poor direction review supervision on part of the engagement partner. So this is also what? A risk, detection risk is there, but that is not because of sampling. So is it clear? Is it clear? Let me just have a look at your queries now. So if any of the audit procedure is not performed properly, so insufficient risk assessment procedure is a non-sampling risk. Yes, Anubhav, you are correct. Sampling example, Dhanush, I hope it is clear now. I gave you example of sales transaction. Let's say there are lakhs of transaction. A total of 1 lakh transaction, sales transaction are there. So checking 100% transaction is not possible. So auditor may select a sample of, let's say, 40% out of the sales amounting to less than 50,000. And with respect to the balances which are more than 50,000, auditor is checking 100% of the sales transactions. So this is what sampling technique. So there are a number of sampling methods, techniques that the auditor may follow that we are going to study when we will be covering SA 530. So Anubhav, is it clear? Not Anubhav, it is whose query? Dhanush, is it clear? Anubhav is saying crystal clear. Good. Dhanush, is it clear? Yes, Dhanush is saying. So I hope you are now able to understand the all kind of risk. I told you na that starting mein to you may find that itna number of risk are there. But once we have had a discussion and at the end, I am sure that each thing is clear that, okay, inherent risk is this thing, control risk is this thing, detection risk, sampling risk, non-sampling risk is this thing. So Tanvi is saying, ma'am, please repeat non-sampling risk. See, non-sampling risk can be, let's say, if with respect to the inventory, auditor was supposed to, the best audit procedure was to inspect the or to observe the physical inventory count that has been done by the management or the client organization. But instead of that, auditor performs some other procedure. So here auditor is performing what? Inappropriate audit procedure, right? Or let's say a debtor balance is to be confirmed, right? So the best procedure should be that the auditor should send external confirmation to that debtor in order to confirm the debtor balance. But instead of that, auditor just relied upon the invoice copies or the written representation from the management. So auditor is performing what? Inappropriate audit procedure. So why inappropriate? Because maybe the management had an intention to manipulate that balance, and auditor, instead of sending the external confirmation, just relied upon what management is saying. So if any detection risk or any kind of risk of not detecting any misstatement is there, which has nothing to do with sampling risk, so that becomes what? Non-sampling risk. Tanvi, is it clear? Yes, Harshada, there are a number of techniques and a number of methods that I told you we'll be covering later on. And Tanvi is saying clear. Okay. Otherwise, is there any thing that is left? If I've left any of the queries, you may resend it because there are a number of messages in the chat box. It might happen that any of your queries is left unanswered. Okay. So this is about what? Detection risk. And one very interesting topic that you all have already answered. See, can auditor influence inherent risk? Do not look at the screen, just tell me. Can auditor influence the risk of material misstatement as such, inherent risk and control risk? So the answer is no. A big no from all of you. Can the auditor influence the detection risk? So write D and your answer for detection risk. D and your answer. So Smriti saying yes, Aman saying yes, Harshada, Bhumika, everyone saying yes, absolutely correct. Okay. So auditor can influence detection risk. Okay. IR and CR, that is inherent risk and control risk, belong to the entity. They are influenced by the entity. So see, ultimately, though we have to reduce, we as auditors, we have to reduce the audit risk to an acceptably low level. So auditor must reduce detection risk in order to keep the audit risk at low level. By what all can be done? So when I was asking you that how the auditor can balance that equation of audit risk is equal to risk of material misstatement and detection risk, one of you said by increasing the area of checking, which was absolutely correct, right? So auditor can reduce the detection risk by either increasing the area of checking, sampling risk nahi rahega na, or the like the next point said, testing larger samples, right? Including competent and experienced persons in the engagement team. Okay, so this is the way auditor may reduce the detection risk. So area of checking, you can also say that, let's say earlier with respect to the P&L item, auditor decided to check the major items only. Now auditor has decided that each and every item, each and every assertion of the item of the financial statement, whether it is P&L or balance sheet, it will be checked. Okay, is it clear? Quickly tell me. So I hope this table now, that audit risk is the function of risk of material misstatement and detection risk. Further, risk of material misstatement consists of inherent risk and control risk, and detection risk consists of sampling risk and non-sampling risk. I want a reply from all of you whether it is clear or not, so that we can proceed further. And I hope you have found it interesting also. So all of you are saying yes, ma'am, it is clear. Okay. So before proceeding with the next topic, which is what? Mm, which is essay 315. Okay. We will do one thing. We will take a break of 15 minutes here, and after the break, we will be starting with essay 315, which is identifying and assessing the risk of material misstatement. Now, risk of material misstatement is clear to you through understanding the entity and its environment, right? So, if in case there is any query which is left unanswered, you can always send that query in the this short break, right? So we will take a break of 15 minutes here. So students, I hope you all are back after the break, and I can see there are two queries. So I'll just take that up. So one is basically Mr. M. Gora is saying, ma'am explained second point in checkbox, page number 3.9. 3.9. So I think now it should be clear. Audit risk is a function of risk of material misstatement and detection risk, because we have discussed this. And another query is there. Just a minute. Whose query is this? So Navdeep is saying, ma'am, risk of material misstatement at financial statement level is left. Okay, we'll do that. So see, one topic was left whereby we were discussing risk of material misstatement, this topic. That the risk of material misstatement may exist at two level, page number 3.5. So risk of material misstatement can be at the overall financial statement level and at the assertion level for classes of transaction, account balances and disclosure. Now, student, after the discussion we have had with respect to the assertion topic, with respect to the misstatement, tell me, uh, I'm giving you one of the example of risk of material misstatement. You need to tell me, is it at the overall financial statement level or is it at the assertion level? So overall financial statement level basically means that where that risk is having an effect on a number of assertions in the financial statement. That is the effective pervasive. Pervasive is what we have done this word in our chapter number 2 also, whereby I was explaining you the meaning of term planning. I told you planning is pervasive, omnipresent, present everywhere. है ना? So when the risk of material misstatement is pervasive to the financial statement as a whole, it is having an impact on the entire financial statement, or it is having an impact on many assertions. It is what risk of material misstatement at the overall financial statement level, right? And secondly, risk of material misstatement at the assertion level is, let's say there is any debtor uh, with respect to which, let's say, 1,000 rupees have been wrongly booked. So this is what this is affecting that particular debtor only, right? So these it means that this is the risk of material misstatement which is affecting that particular assertion. Now tell me, when the financial statements are prepared based on going concern, but the going concern basis is inappropriate, is this a risk of material misstatement at the assertion level or the overall financial statement level? Student, listen to my question carefully. So overall financial statement, that is having an impact on many assertions. And a assertion level means a particular assertion. I've told you, I've explained you the meaning of the term assertion, like the existence with respect to building, the rights and obligations with respect to building, right? So when the financial statement are prepared based on going concern basis, though they should have been prepared on liquidation basis or some note should have been given, tell me, let's say they were supposed to be prepared based on liquidation basis, is it risk of material misstatement at the overall financial statement level or the assertion level? So all of you have said that, ma'am, overall financial statement level. One or two answers I have received at as assertion level. So all those who have written assertion level, would you like to revisit your answer? Then I'll explain it. So the correct answer is overall financial statement level. So Navdeep, Anubhav, Bhumika, tell me, would you like to revisit your answer? Bhumika is saying overall. Others, chalo, theek hai. I'll repeat my question. So see, I'm saying that the financial statements are prepared based on going concern basis. ठीक है. However, the going concern basis is inappropriate and the financial statement should have been prepared based on liquidation basis. ठीक है. Now tell me, is this a risk of material misstatement at the assertion level? That is it affecting a particular assertion only? Or is it affecting the overall financial statement? So now Anubhav is saying overall and Navdeep, correct. ठीक है. So now all of you is saying overall financial statement level. Let us just have a look at the meaning of these two terms. So the way we said risk of material misstatement can be of two types, that is inherent risk and the control risk. ठीक है. Same way, another criteria that we can see is that risk of material misstatement may exist at two level, that is the overall financial statement level and the assertion level. So when we say overall financial statement level, it basically means that the risk relate pervasively. Pervasively is what? Omnipresent. If you look at the omnipresent, if you look at the dictionary meaning now, that is present everywhere. Sarvatra, we call it in Hindi, है ना? So it is having an impact on the financial statement as a whole and may affect many assertions. ठीक है? So it will be risk of material misstatement at the overall financial statement level. And assertion level, to determine the nature, timing, extent of further audit procedure necessary to obtain sufficient appropriate audit evidence. Basically, it means that now if that risk is associated, let's say, with respect to building, so auditor is going to perform the procedures with respect to that particular assertion. So that is why it is saying that when the auditor identifies and assesses the risk of material misstatement at the assertion level, it helps him to determine the nature, timing, extent of further audit procedures necessary to obtain sufficient appropriate audit evidence. So let's say if the risk is associated, let's say, with respect to your inventory. So accordingly, auditor is going to decide the nature, timing, extent of the further audit procedures with respect to examination of inventory. Okay. Now, students, if you remember, when we were doing definition of risk assessment procedure in chapter number 2, okay, we were doing this definition now. When we were doing essay 315, that is identifying and assessing the risk of material misstatement to understanding the entity and its environment. Tell me, the risk assessment procedures will be performed by the auditor at the financial statement level or the assertion level or both? Do not look at the definition, just tell me. I need replies. So let me just have a look at your replies. Both. Correct. Now, if you just have a look at the definition of the term risk assessment procedures, page number 3.13 of your module. So see, the audit procedures performed to obtain understanding of entity and its environment, including entities' internal control, to identify and assess the risk of material misstatement, whether due to fraud and error at the financial statement and assertion level, are defined as risk assessment procedures. And student, when we will be doing definition of further audit procedure or test of control, you will see The term that is used there is at the assertion level. But here, when we identify and assess the risk of material misstatement, we perform audit procedure both at the financial statement level and at the assertion level. Abhi definition ko we will do later on, but this was the concept that I wanted to discuss with you. Now we'll be starting with essay 315, that is, see, if you learn the name of this essay, identifying and assessing the risk of material misstatement through understanding the entity and its environment. These words or the name of this essay will be used again and again. If you look at the definition of the term risk assessment procedure, major chunk of this definition is that name only. Hana? So try to devote, try to, give your energies towards learning these keywords. This name is, you will see that it is used a number of times, and I am repeating it again and again, and it is very simple. See what we are doing. We are identifying and assessing what the risk of material misstatement. How? Through understanding the entity and its environment. Hana, is it clear? Okay. So now let us start with the essay 315, which is what? Identifying and assessing. So first you will identify, you will discover, and then you will assess, you will evaluate that what risk of material misstatement. How? Through understanding the entity and its environment. And you all now know, and I want a word from you. What will the auditor perform in order to identify and assess the risk of material misstatement? What are those procedures called? Tell me, what should I mention here? Aman correct, Smriti correct, Rajveer correct. Others? Auditor has to identify and assess the risk of material misstatement. I told you that procedures are going to be the same. The context in which you are using them, their nomenclature will change. Rihanna correct. So those will be termed as risk assessment procedures. ठीक है हाँ अब you just try to understand now what is happening here. Auditor is just identifying and assessing the risk of material misstatement. So what he's doing, let's say, auditor, what he does is he calculates the gross profit ratio of this company and compare it with the trend of the earlier years. And he also compares with the trend of the other companies in the similar industry. So furniture manufacturing company hai, so what are other companies in the similar industry, what GP ratio they are earning, right? So last time also I gave example. For example, our client, the percentage is 8%, 9%, 10%, and then all of a sudden it is this year a jump of 5%. However, with respect to other companies in the similar industry, it is what? 8%, 9%, 10%, and 11%. Now, this is something unusual, na? So, but is auditor, what is auditor doing here? He is performing a risk assessment procedure. What is the name of this risk assessment procedure? Analytical procedure, right? Or you can say another thing can be what? Auditor just discusses with the management, okay, management, tell me, or he inquires the management, please tell me, are there any litigation going against the company? Are there any foreign subsidiaries? So this is what inquiry. Okay? Or let's say auditor is just going through the last year predecessors report or the predecessors report or the last year financial statements of the company. So what is he doing? He is inspecting, right? So these are what? The risk assessment procedures whereby he is just identifying and assessing the risk of material misstatement. So यहाँ पे I'll not say na auditor will do calculation, auditor will do depreciation calculation, or auditor will perform BRS. Abhi he has not started with actual checking of the financial statement, and that he'll be doing in further audit procedures. Why? Because once auditor performs the risk assessment procedures, right? Once auditor performs the, I'll just write here, once auditor performs the risk assessment procedures under SA 315, based on the outcome of these risk assessment procedures, auditor is going to respond to these risk assessment procedures ka outcome under SA 330 by performing again further audit procedures. And the name of SA 330 is what? The auditor's responses to assessed risk. Where has he assessed that risk? Under SA 315. The procedures are going to be the same, but here recalculation will also be done. Re-performance of BRS will also be done, Hana. So all those procedures that is we did in the last session, ICAI, ORR, and we'll be doing these in detail in chapter number 4. ठीक है? तो अभी I've just given you a brief understanding about the entire process. So what is the name? Identifying. I'll be repeating it again and again because I really want you all to, learn these, but yes, after understanding, right? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. ठीक है? Why? For providing a basis for designing and implementing the responses to assessed risk. So what is an example? Let's say auditor identifies that with respect to sales, under SA 315, auditor identifies that with respect to sales, the risk of material misstatement is high. How will auditor respond? By performing procedures under SA 330. What procedures auditor may perform? Now, since the risk of material misstatement with respect to sales, as auditor has identified and assessed is high, here under SA 330, auditor may decide that, okay, with respect to sales transactions, now I am going to check 100% transaction. Or let's say I'm not going to rely on the internal control. Or let's say I'm going to obtain external confirmation with respect to all the debtors. So this is the way. So providing a basis for designing and implementing responses to the assessed risk of material misstatement. तो response कैसे करेंगे? उसको call थोड़ी ना करेंगे. Auditor will what? He will be performing the audit procedures only. So providing a basis for designing and implementing the responses to assessed risk. और ये कहाँ पर हम perform करते हैं? Under SA 330. I hope एक clear picture आपको थोड़ा सा समझ आ रहा है as to what we are going to discuss. Anubhav is saying yes. Others also please reply. Clear? Now clear, he's saying. Aman Spriti saying yes. Others also please reply. ठीक है. So what is the objective of SA 315? So now see, when you will look at the objective now, again the name of SA will come to your rescue. Identify and assess the risk of material misstatement. And I always tell students that do not devote your energies again and again to the same thing. So you all know that misstatement can be due to fraud or error. So now do you all know that whenever you have to write to identify and assess the risk of material misstatement, you will be writing whether due to fraud or error. And in fact, you will see wherever misstatement is mentioned, it is followed by whether due to fraud or error most of the times in your module. Hana? So be smart learners, right? And now you all know that risk of material misstatement can be what? At the financial statement level and the assertion level. Okay? How? Through understanding the entity and its environment. And in the last session, I told you, though internal control is not there in the name, but including its internal control in the explanation, because entity and its environment includes what? Internal control. Okay? Why? For providing a basis for designing, implementing responses to assessed risk of material misstatement. How? By designing and performing the further audit procedures. This objective, it clarifies all your doubt in my opinion, because it tells you why we are studying SA 315 and why we will be studying SA 330 also. Tell me, is it clear? So I'll repeat it. The objective of the auditor as per SA 315 is to, just keep in mind the name of SA 315, identify and assess the risk of material misstatement, whether due to fraud and error at the financial statement level and the assertion level, through understanding the entity and its environment, including the entity's internal control, thereby providing a basis for designing and implementing responses to assess risk by designing and performing the further audit procedures. Is it clear? So for all those who tell me, ma'am, we find learning, retaining the concepts of auditing very, like we find it difficult. Are you actually finding it difficult now? Is it actually difficult? Tell me. You just need learning after understanding. Picking up the keywords, learning the keywords is definitely required if you want to pass with flying colors. But yes, after understanding, no cramming is required. Tell me, are you finding the learning also easy or not? So, Anubhav, that is why I'm telling you now, be smart learners. Don't devote your energies again and again. See, wherever you will be finding the term audit evidence, you will see it is like the earlier words will be what? Sufficient and appropriate audit evidence. Misstatement, whether due to fraud and error. ROMM at the assertion level or the financial statement level, right? So, be smart learners. Chalo, students are saying they are finding it easy. That's good. Okay. So for identifying and assessing the risk of material misstatement, what will auditor do? So again, the name of SA 315. First of all, he'll identify the risk of material misstatement. I'll do one thing. I'll just take you through the module for this topic. So we are on page number 3.12, identifying and assessing the risk of material misstatement. The entire name is mentioned here. Hana? So through understanding the entity and its environment. So objective we have seen that he shall identify and assess the risk of material misstatement at both financial statement level and assertion level of class of transaction account balance disclosure to provide a basis for designing and performing further audit procedure. Now, what will auditor do when he's identifying and assessing the risk of material misstatement? Okay? Auditor will identify, first of all, he'll identify the risk, then he'll assess that risk, then he'll relate that risk, and then he'll consider the possibility of multiple misstatement in order to see the magnitude of misstatement, that is whether this is material or not. Okay? So these are the 4 steps for SA 315. So for the purpose of identifying and assessing the risk of material misstatement, auditor shall identify the risk throughout the process of obtaining and understanding of the entity and its environment. Throughout the process, he will be alert that is there any risk associated with it. For example, let's say auditor is inquiring the management. Okay, management, tell me who are your raw material suppliers. So management tell the auditor that see, we used to we are importing from the Korean companies. However, there is a recent ban on import from Korean government. Auditor will be alert. He will identify the risk throughout the process of understanding the entity and its environment. Why? Because if you remember, if you have done going concern assumption in your foundations also or in your inter also, you all are aware that there are various indicators whereby there is material uncertainty, right? So when there is, let's say there is loss of a critical supplier, of raw material, this is one of the indicators, right? So auditor needs to be, alert. He'll identify the risk throughout the process of obtaining and understanding, including the relevant control. So auditor is understanding here control means what? Internal controls. Okay? That relate to the risk and by considering the classes of transaction account balances and disclosures in the financial statement, right? Assess the identified risk and evaluate whether they relate more pervasively to the financial statement as a whole and potentially affect many assertions. So whether they have an impact on the financial statement as a whole or not, auditor is going to assess and evaluate that, right? Then relate the identified risk to what can go wrong at the assertion level. taking account of relevant controls that the auditor intend to test. So first was what? To identify the risk throughout the process of obtaining an understanding of the entity and its environment, right? Along with that, he'll include what? Relevant controls also. Okay? Then he'll assess the identified risk and evaluate whether they have an impact on the financial statement as a whole. Third point mate says that relate the identified risk to what can go wrong. If there are any relevant controls that have been implemented by the management, consider them also and see what can go wrong after considering the relevant controls that the auditor intends to test, right? And at assertion level, this is saying that is with respect to each and every assertion, each and every relevant control that has been implemented, test as to what can go wrong. And lastly, consider the likelihood of misstatement, including the possibility of multiple misstatements, whether the potential misstatement is of magnitude that can result in a material misstatement. So consider the magnitude, whether it can be material, because you have seen material, whether individually or when aggregated with other misstatements. Up to it is going to be very much clear. So in short, if I just tell you, identify the risks, और यहाँ पर रेलेवेंट कंट्रोल को भी कंसीडर करना है, assess the risk, evaluate the pervasiveness, whether it has an impact on many assertions, relate to the identified risk, what can go wrong at the assertion level, plus again यहाँ पर भी relevant control का बात किया गया है, plus likelihood of misstatement, that is possibility of multi misstatement, whether the potential is what? Likely. Potential is what? Likely, which may happen. The magnitude, whether it is material or not. And how ka answer I have given you, and you all have also answered it correctly by performing the risk assessment procedures. Tell me, is it clear? This can form a very good 4-mark question. ठीक है. So for the purpose of identifying and assessing the risk of material misstatement as per SA 315, what is the auditor going to do? So when you get a 4-mark question, don't just write he's going to perform risk assessment procedure, because this question is saying what are the steps that the auditor is going to do. See, when he is doing identifying the risk, how will he identify? He'll inquire. This is risk assessment procedure. When he's assessing and evaluating, again he's doing some of the procedure. So risk assessment procedure, though he's performing everywhere, but particularly what he's doing, he's identifying, in assessing and evaluating, he's relating and he's considering the likelihood of misstatement, whether the magnitude is such that it could result in material misstatement. Is it clear? Is it clear? Quickly tell me so that now we can proceed with the definition of risk assessment procedures. Charan, please repeat your doubt. Where are you, to which line are you talking about? So, Tanvi, magnitude here means the impact. If all the misstatements are taken together, what is going to be the impact? Whether it will lead to material misstatement, volume, you can say. Tanvi, is it clear? And Charan, you also mentioned relevant control. Acha, relevant control. So relevant control, say it means that, so you are talking about this relevant controls, na? So whatever controls are implemented by the organization, relevant to that particular assertion, if any control is been implemented, so considering the impact of that control. Charan, is it clear? ठीक है. So the next topic that we are now going to discuss is about your risk assessment procedures that we have discussed a number of times. But again, in order to learn the definition, I told you somewhere or the other the name of SA 315. Okay? So you will see whenever we are going to study the definition of test of controls, further audit procedures, and here risk audit procedure, assessment procedures. So these are what audit procedures, right? So the first line will be the audit procedures in all the 3 definition, that risk assessment procedures are the audit procedures performed, right? Now you all know what is the purpose: to obtain an understanding of the entity and its environment, including the entity's internal control. So though this is not in the name of the essay 315, but it is here. Why? To identify and assess the risk of material misstatement. And you all know risk of material misstatement can be whether due to fraud and error, and you all know it can be at the financial statement and assertion level. Tell me, are you able to learn this definition? Understanding to now, I'm sure it must have been clear. I'll repeat it. Risk assessment procedures are the audit procedures performed to obtain an understanding of entity and its environment, including entity's internal control, to identify and assess the risk of material misstatement, whether due to fraud or error, at the financial statement and assertion levels. Tell me, I need replies from all of you. Understood, clear. Yes, ma'am. Clear. Very good. Easy, ma'am. Clear. Chalo, good. Okay, so these are what risk assessment procedures. Now tell me, students, when the auditor is performing risk assessment procedures, can auditor give his opinion based on risk assessment procedures? Tell me, can auditor give his opinion wholly and solely based on the outcome of risk assessment procedures? Yes or no? No. Correct. Okay. Why? See, based on the outcome of risk assessment procedures, auditor is going to decide the nature, timing, extent of the further audit procedures. And it is the further audit procedures where we are actually checking the financial statements. We are checking the assertions. Okay? So I can say that the risk assessment procedures by themselves do not provide sufficient appropriate audit evidence on which to base the audit opinion. So I, as an auditor, I cannot do like this, that I have performed the risk assessment procedure. Based on this, I found that, okay, the internal controls are very good. So that means the financial statements are very good. And therefore, I'm saying that the financial statement reflected true and fair view. This will not happen, because risk assessment procedure, they provide a basis for identification and assessment of risk of material misstatement at the financial statement and assertion level. Okay? They as such do not provide sufficient appropriate audit evidence on which to base the audit opinion. Audit opinion will be based on various conclusions drawn from the audit evidence, but that audit evidence will be obtained by performing various other procedures also. Yes, risk assessment procedures can help, but by themselves, they do not provide sufficient appropriate audit evidence on which to base the audit opinion. Okay? So this line is given here in your module, and it is a very, very important line. You can get any MCQ or case on this line. So this is page number 3.13. See, it's mentioned here. Risk assessment procedure by themselves, however, do not provide sufficient appropriate audit evidence on which to base the audit opinion. Clear? Okay. So just now, many of you have asked me query, ma'am, is recalculation, reperformance, all those procedure will also be included here. See, I told you that procedures will be same. Okay. Now it depends upon the context why these have been used. So the risk assessment procedures that the auditor can include or he shall include as per SA 315, these are what? Inquiries of management and others within the entity, analytical procedures, observations and inspection. ठीक है. So abhi you are not actually checking the financial statement at the assertion level na. So recalculation, reperformance, external confirmation, all these things is going to come later in the picture. ठीक है. I hope it is clear. So now we are going to discuss about the various types of risk assessment procedure, which are what? Inquiries, analytical procedure, observation and inspection. Okay? And the information that has been obtained by performing the risk assessment procedure, that can be used as an audit evidence. But again, the risk assessment procedure by themselves, they do not provide any basis for forming the opinion. Is it clear? Is it clear? ठीक है. So now let us discuss this inquiry. ठीक है. Now tell me, let's say you are conducting the audit of an organization, ठीक है, and you are performing the risk assessment procedures. With whom, and you are performing inquiry as the risk assessment procedure. With whom can you have an inquiry? Whom can you inquire? Who are the persons within an organization? Apart from management, management say, so we will inquire. Others also, please tell. Employees, KMPs, suppliers, acha. Departmental head. Others also please reply. See, we are just identifying and assessing the risk of material misstatement. So now for all those who are saying, I'll communicate with the debtor, do you have the access to the email IDs, to the telephone numbers of the debtors at this stage? है ना. अभी तो you are just identifying and assessing the risk of material misstatement. I told you we are not yet starting checking the financial statements, the assertions as such. ठीक है. So inquiries. So let us just look at this topic from your module. This is given on page number 3.13. So inquiries of management and others within the entity. Management and others within the entity. So many of you who have given some other answer, I hope it is clear to you now. Within the entity. So much of the information obtained by the auditor's inquiries obtained from management and those responsible for financial reporting. However, auditor may obtain information or a different perspective in identifying and assessing the risk of material misstatement, in identifying the risk of material misstatement through inquiries of others within the entity and other employees with different levels of authority. So very, very important. See, this appears to be a very, easy question that give examples where the auditor can conduct the inquiry as risk assessment procedures. But what if you write suppliers, right? What if you write debtors? ठीक है. So others within the entity, so it can be the internal audit personnel. ठीक है. I'll explain all these inquiries of employees, in-house legal counsel, then it can be marketing and sales personnel. ठीक है. Personnel is working within the entity. Then risk management function and the information system personnel of the entity. ठीक है. So let us read this, then I'll look at your queries. So inquiries internal audit personnel से कैसे, what all you may ask, they may provide you information about the design and effectiveness of entities internal control, because the internal audit personnel, they must be having an information with respect to the design and effectiveness of entities internal control and whether management has satisfactorily responded to the findings from those procedures. ठीक है. Inquiries of employees. So if any complex, unusual transactions are there during the year, let's say when auditor inquired the management, auditor became aware that there were mergers and acquisition during the year. Okay. Now, all those who were involved in that mergers and acquisition, auditor may inquire them. Okay. So complex, unusual transactions, right? Help the auditor to evaluate the appropriateness and selection of certain accounting policies. Okay. Then inquiries directly towards in-house legal counsel. That is, what are the litigation, compliance with law regulations, suspected frauds, hana, arrangement, joint ventures with business partners, and meaning of contracts, right? If any legal contracts are there, what is the meaning of particular phrases, particular clauses? Then marketing and sales personnel. Why? Because auditor might be interested in knowing the entity's marketing strategies. And in fact, we will see when we obtain the understanding of the client's business, the knowledge of the client business, we obtain understanding about the strategies, the objectives, the risks of the company. So marketing strategies, ठीक है, contractual arrangements, inquiries directed to the risk management function, operational and regulatory risk that may affect financial reporting. And another example can be inquiries directed in information system personnel may provide about the information system changes, control failures, or other information system related risk. Is it clear? So now for all those who have written different answers, I hope it is going to be clear. So Anubhav is saying yes, it is clear. Others also please reply. Tanvi, you reply. Bhumika, you reply. Anubhav, you reply. Anubhav saying clear. Tanvi saying clear. Bhumika, you also reply. Why I have taken names of these students? Because I have looked at the answers, what they have given, and that is why I've asked them to reply as to whether it is now clear to them or not. Okay. And then the next procedure was analytical procedures. I told you essay 520 when we will be doing, we will do this in detail. Okay. But I just want to give you an example here with respect to essay 520, how it will be used. See, so I always give this example of GP ratio. Now see, when the auditor, let's say auditor is not performing this procedure of, calculating the GP ratio, comparing with the earlier year trends, comparing it with the industry trends, है ना, जो हमने अभी पढ़ा था ना कि 8%, 9%, 10% and 15%. However, other companies are doing it like this only. So all of a sudden there is an increase of the gross profit ratio. That means auditor might see that there is risk of material misstatement, higher risk of material misstatement, let's say associated with the sales, maybe fake sales have been shown. Okay. Now this is something unusual. And if you see, this is a very broad idea that the auditor is able to understand by applying the analytical procedures. So these are the two things that I wanted you all to understand at this moment. So if you just look at your module, see, it is mentioned that, and see, if auditor if the auditor does not perform all these things, he's not doing this. He's just looking at the PNL, and in the PNL, he sees that, okay, the GP ratio is coming out to be this. Can auditor become aware about this unusualness without calculating this, without performing this analytical procedure? Just by doing the routine checking that, okay, with respect to PNL, I've checked the sales, I've checked the purchases, the inventory, everything I have checked. Will it, would it have helped the auditor in considering this unusual situation? No. Hana. So by performing such kind of audit procedures, auditor is able to see the unusual trends. Okay? So these are the 2-3 points जो अभी I wanted to concentrate on. Otherwise, we are going to do this in detail when we will be doing essay 520. So see, it's mentioned here. देखो, analytical procedures. So this is page number 3.14. As risk assessment procedure may identify aspects of entity which the auditor was unaware and may assist in assessing the risk of material misstatement in order, वो तो you all know, in order to provide the basis for designing and implementing responses to assessed risk. So unaware, ठीक है? Then see, unusual transactions. Analytical procedures help to identify the existence of unusual transactions, events, amounts, ratios, and trends that might indicate matter that have audit implications. Are you able to now understand? And then I told you that overall approach mila na aapko. So see, it is mentioned here. Such analytical procedures use data aggregated at high levels. The results of those analytical procedure only provide broad initial indication about whether a material misstatement may exist. It may happen na, that when auditor found that GP ratio ka itna bada difference is there, auditor discussed with the management. Management tell me what is this? Inquiry kiya. Management told the auditor that see in this year na, let's say certain kind of product was required in the market and that only we were manufacturing, no other so I'll give you an example. Let's say there is a biscuit manufacturing company, okay, and the other biscuit manufacturing companies are there. Now all of a sudden there has been increase. So auditor asks the management, management tells that see during the year there has been increase in the sugar-free biscuits that only we were manufacturing. There we had a monopoly in that. No other manufacturer was selling such kind of, or you can say any sugar-free biscuits or anything like that. We were only manufacturing that. So then there is tend to be, a sudden increase in the sales. Hana? So that is why the term that is used here is what? May exist. So it is just an indication. But we all know the auditor needs to be alert all the time. Hana? Accordingly, in such cases, consideration of other information. Now keep in mind biscuit wala example. Other information. So now what auditor will do? He'll inquire the management that please tell me what is the reason. Okay, has been gathered while identifying and assessing the risk of material misstatement. Is it clear? Is it clear? Okay, and then we are going to discuss what? The observation and inspection. So students, for your Saransh, one link has been shared in the chat box. You may refer to that. So it is the Saransh beautifully gives a summary and bird's eye view of the entire chapter, right? So very useful. You must use that. Observation and inspection. So observation and inspection will support the management inquiries. For example, management, while inquiring with the management, management told the auditor that see during the year na, we have added one more factory, right? And that is why there has been increase in the depreciation during the year, right? Now, how to support management's response to that inquiry? Auditor will observe and inspect. He will observe or inspect the entities, premises, and plant facilities, right? Or auditor may observe the entity's operation. Just a minute. ठीक है, entities operation, ठीक है, then documents, then reports prepared by the management and those charged with governance and the entities, premises, and brand facilities. So these examples now you can always get a direct question also, that give examples with respect to the observation and inspection that the auditor may perform as what? Your risk assessment procedures. Okay, is it clear? Is it clear, students? Chalo, good. So we have discussed about the various risk assessment procedures that the auditor may perform. And if I ask you, tell me, do not look at the module, just tell me whether the information that we obtain by performing the risk assessment procedures, can this be used as audit evidence? What is your answer, yes or no? Quickly send in your replies. Can this be used as audit evidence? I'm saying, can this be used as audit evidence? I'm not saying the only audit evidence. So answer is yes. Can this be used solely to give, can only on the basis of the outcome of risk assessment procedure, can an opinion be given? Answer is no. Students are getting confused here. I'll repeat here one thing. See, the information that is obtained by performing the risk assessment procedure, that can be used as audit evidence. That can be used as audit evidence, right? So information obtained by performing risk assessment procedures relating and related activities may be used, just a minute, may be used by the auditor as audit evidence to support assessment of risk of material misstatement. In addition, the auditor may obtain audit evidence about classes of transaction balances and related assertion and about the operating effectiveness of control. Is it clear? So auditor, can he use the information obtained by performing risk assessment procedure as audit evidence? The answer is yes. But can he base his opinion based on the outcome of your risk assessment procedure? Answer is no. Where is given? Where is this line given? Where here? Risk assessment procedure themselves, however, do not provide sufficient appropriate evidence on which to base the audit opinion. This is given where on page number 3.13. So is it clear? Is it clear? Because I could see there were different answers that I was getting. So do one thing quickly, read this test your understanding four. And students, in your chat box, one link for webinar schedule has been shared and one link for Saransh has been shared. So please refer to those links by Ankita ma'am. So please refer to those links. Tanvi Singh ma'am, it is now clear. Read this. Jojo Limited is planning to list on Bombay Stock Exchange next year. As an auditor of Jojo Limited, identify one reason of increased audit risk due to listing of company next year. Go through this. See, Limited is planning to list on Bombay Stock Exchange next year. ठीक है? So company will have an intention to show good profits. ठीक है? Now, as an auditor, what is the audit risk? So you all know what is audit risk, that the auditor may give an inappropriate opinion. Now let us look at the answer that is given and try to correlate the two things. So answer is given on page number 3.84. It says that Jojo Limited is planning to list on Bombay Stock Exchange. There is greater chance of misstatement in the financial statement due to planned listing next year. There could be possibility of intentional manipulation of financial statements so that good response is received to the proposed issue, right? Therefore, there is increased audit risk, that is risk of expressing inappropriate opinion by the auditor when the financial statement are materially misstated. See, management may manipulate the financial statement in order to give a good picture so that there can be what? Good response to the proposed issue. So intentional manipulation, that is fraud factors, can be there. So in such a situations, you all have done inherent risk, that audit is not an investigation, right? So here risk of expressing an inappropriate opinion when is more, that the financial statements are materially misstated. Is it clear? Read test your understanding 5 also, page number 3.16. On perusing is reading the financial statements of Jojo Limited up for audit, it is observed by auditor that current ratio has improved from 1.20 is to 1 in the preceding year to 1.75 is to 1 in current year. Identify what kind of risk assessment procedures are being performed by the auditor. ठीक है? Has it any relation with listing of company next year on BSE? Quickly send in your replies. देखो, first part तो you should be able to answer immediately. We have dedicated one lecture to this only, risk assessment procedures पे. So I'll take you through the answer also, and I'll have a look at your replies also. So how much time are we left? Okay. Just this last question and then we'll end the session. So, test your understanding 5. So, it is noticed that the ratio has improved. The auditor is performing what? Analytical procedures as risk assessment procedures. So, this answer I was expecting from all of you. Now, what was the question that? Just a minute. Has it any relation with listing of company next year? So current ratio has improved from previous year. There could be possibility of misstatement in current assets and current liabilities. It is possible that improvement in current ratio is artificial due to misstatement and has been done to secure good response to the proposed issue of the company next year. See, you will think why the auditor is thinking so negatively that it has been manipulation. You need to be alert all the time, and you need to apply professional skepticism, be of questioning mind all the time. Okay, is it clear? Now let me just have a look at your queries, and I'm not starting any other. Yes, window dressing could have been done. So who has used Anubhav Mittal? Yes, absolute. Anubhav Malik, absolutely correct. Abhinav, now I'll discuss assertion level in the next session because we are left with very less time. Okay. So I hope student it is clear. So I'll just in a minute or two, I'll just recapitulate as to what we have done today. So we started our discussion with audit risk, whereby we have studied that it is a function of risk of material misstatement and detection risk. Misstatement also we have seen a number of examples also. Then risk of material misstatement consists of inherent risk, control risk, and detection risk is sampling risk and non-sampling risk. Risk of material misstatement is risk that the financial statement are material misstated prior to audit. It can be at overall financial statement level and assertion level. That is why we perform risk assessment procedures at both the level. So in the definition, financial statement assertion level is coming. Inherent risk is susceptibility, likeliness of assertion to a misstatement that could be material. So this you are supposed to write about a class of transaction, account balance, or disclosure. Uh, that could be material, either individual or when aggregated with other misstatement before consideration of any related control is what? Control that has been put on this assertion. Acha, there was one doubt, maybe it was related to this. So control relating to this assertion. Okay. And then we discuss about control risk. That is, the internal control is not able to prevent or detect and correct on timely basis any material misstatement. Okay. And there's an inverse relationship between efficiency of internal control and control risk. Then we studied about detection risk, that the procedures performed by auditor to reduce audit risk to an acceptably low level will not detect a misstatement that exists and that could be material either individually when aggregated with other misstatement. Sampling risk and non-sampling risk examples we have seen. Then you have seen that inherent risk, control risk belong to the entity. Auditor cannot influence them. Auditor can influence DR. How? By increasing the area of checking, by testing larger sample and including competent and experienced personnel in engagement team. Then we did essay 315, whereby we did the objective, the process, and something about risk assessment procedures. So I hope it is clear. So students, if you have any doubt, please send in your replies, your queries. And as I always tell you, you have to read this chapter today itself. You have to make your notes, ample spaces there in your module also, and you may use the highlighters to make the notes or the keywords. Like the basic idea is you need to learn the keywords, right? And learn them after understanding. So any
Yeah.
doubt? Yeah.
Good evening, Nancy.
Good evening, ma'am. Now
How
over,
are you?
ma'am, I'm good.
Yeah.
Over.
So hope all the queries are resolved now.
Yes, ma'am. From my side, everything is done. Rest, let's see if students send any queries.
Yeah. Good evening, students. This is CA Karuna Bansali, faculty for auditing and Ethics, Paper 5, Intermediate Level from Board of Studies. And just wanted to interact with you. If you have any feedback on the classes, and of course, Nancy ma'am is already detailing you about the topic. Today we have started with risk assessment and internal control topic, right? And various types of risk, inherent risk, and all the risks are already being explained by Nancy madam, right? So I hope you all are like making your own notes. You're preparing your documentation, right? Hmm? Can you all mute, unmute? Okay, they cannot. Okay, can you write in the chat? Yeah. If you have any specific feedback, dear students, you can share with us through mobile app. Ask your query feature is there. You can write to us. Nancy ma'am is already explaining you with the help of examples. Dear students, as you all are aware, yeah, this webinar is for May attempt. As you all are aware that now this auditing subjects result is generally not good. So we need to understand this aspect that this subject is not theoretical. We need to apply it practically also, right? Okay. So don't think it is theoretical. And when you go for auditor, when you like when you're preparing your notes, that are audit documentation only. Okay. So if you prepare your own notes and you do writing practice after understanding in the class, like our learned faculties are there, Nancy madam, Achal sir, and they are explaining you in detail. After understanding the concept, you please prepare your notes, and in case if you find any difficulty, you can get back to them. You can revert for those queries in the next class. Okay, so please develop this habit that yes, whatever is being taught, we'll be revising it, and for the next class we need to study in advance. Okay, so if you have read in advance, then you will be able to understand in much more depth and detail in the next class. Okay, so this is the one tip which I would like to give you. Then second thing is, after understanding the concept, if you can practice with the help of like suggested answers, you can use RTP, mock test paper. So at least practice one or two question writing practice and analyze what kind of mistake you are observing. What is the pattern of your mistake? Whether you are not able to understand the question, or you are able to understand but you are not able to recall the provision, how much to write, you are not able to determine. So please do this audit of your preparation at the initial level only, right? So that if you have worked now in the examination, you will be able to write required and relevant answer. And you will not find this difficulty that, yes, we know, but we are not getting marks. So this issue will be resolved. And of course, your feedback is very, very important. So whatever is your feedback, maybe it's on study material, on your classes, so you can share with us. Your feedback is very precious for us so that we can continuously improve in the subject. So with this, if you have any specific query or doubt, you can write to us, or you can share in the class itself so that we can work on that. You can also call us on 0120 So with this, I would like to conclude the class. I would like to convey my thanks to, yeah, you can write on the feedback form. It's on BOS mobile app also, it's there, and you can write on ask your query feature also. So to conclude with, I would now thank to Nancy madam and all the students who have joined the class. And I hope you are preparing notes. If you have not yet, please start now. Please do writing practice, because it will help you. Because sometimes what happens when we study, when we read the topic, we feel that yes, we are able to, and it's done, and it's in our memory. But when we start writing on the same, we are not able to write the required part. Then only we can work on our weakness. So please do this. and this will definitely help you in getting the marks. So this is the one tip which I would like to, which I have shared with you. I hope you will implement on the same, and please uh, come with advanced study. Now, like what is being covered, please revise that, and what we are going to cover in the next class. If you can come with just have a glance on the topic, then you'll be able to understand much more faster and you'll be able to recall the same. So with this, thank you Nancy ma'am, and thank you each and every participant, each and every student. With this, we will conclude this class. If you have any feedback, we'll be glad to assist and work on the same for study material or for class or in any of the manner. Thank you. Thanks a lot.
Okay, thank you, ma'am. Bye.
Thank you. Yeah. Yeah, yeah. Please end the session.